May 5th, 2025. I didn't do any drawings today. I only traded half the day. I don't have a bunch of time today, but thought I'd make a review anyways. We had a big gap down, and the first thing that I think really needed a second leg are bars 6 and 7. 7 went a long enough ways up that it was most likely that it was going to get a second leg, and we'd relieve the bulls who bought the bar 7 high. There's some bull who bought all the way up here that was expecting at least some sort of second leg up. When this was a really large bull bar on its high, it was reasonable to be buying, taking a chance that we were going to get a second leg. So that premise is probably still valid since 7's a bull close. So those traders might buy the bar 5 high and expect some sort of second leg up. Difficult to do anything in here. Obviously, we have a tight trading range and a lot of doji bars, so really not all that excellent. 8, 9. So 8, a high one buy for the bulls. Not the best high one buy, but again, we should still get a second leg. It's probably better to look to buy a pullback after 8, if anything. 9, a bear bar, but not really all that great. You can see we're channeling up. 10 is 3 legs up. 1, pullback. 2, pullback. 3, and then we get a reversal down on 11. You know, you could argue it's a wedge top. I would probably wait rather than selling 11. I'd probably wait for some sort of follow through to see if you can get a bear bar closing near its low. Instead, you get a disappointing pullback on 12, an inside bar, and then a giant bear bar 13 closing near its low. You could sell 13. It's probably not wrong. It's also okay, though, to wait for follow through. The bears have yet to get consecutive bear bars yet so far today, and we've had a lot of trading range price action, so it's a little bit difficult to be shorting. But I don't know. You could probably sell 13 for a swing trade, but a lot of taking swing trades in this environment is just a really easy way to get just kind of destroyed early in the day. And if you're selling 13, you're probably also selling around the middle of the trading range in general. Right. So you're selling the exact middle tick if you're selling below 13. So I might be off by a tick actually on my measurement. It doesn't matter if you're off by a tick or two. It's close enough to the exact middle tick. Okay, so if you're selling one tick below it, the low tick of 13 is the exact middle of the tight trading range. So it's a little bit difficult to be shorting there. Outside up bar on 14. My issue here was that it could be like 3. So 14, 15, 16. I did not take 16. My reasoning was 2, 7, and then 16. I wanted to buy a pullback, and the pullback I wanted to buy was around the bar 13 high. So I would have been okay if this went without me and got 1R. Some sort of symmetrical second leg without me. I was okay with just sitting out of it. But I, in general, thought that we would probably get a second leg up, but I also don't want to be buying the close up here if it could be 3 legs up. 17, 18, and 19, I thought it was, it's obviously the second leg, but you could argue it's like 4. But for me, once we got follow through on this, I kind of started thinking of 14, 15, 16 more as leg 1. And if 14 through 16 is leg 1, then 17 through 19 is leg 2. So I took 19, I bought the close, I scaled in 3 times, and then I got my symmetrical second leg, and I got out up here. 24, 25, 26. I thought it was good enough to take. I did take 20. I took the signal, but I took it on the pullback. So when 27 pulled back to the 24 low and the 25 low, I did not sell the close of 26, but I sold the 24 5 low and the 24 low. I thought it was okay to do that. My issue was that 14 through 16 was a really strong signal. And if I thought that 17, 18, 19 is leg 2, that means this is leg 1, and I'm trading against a leg 1. And leg 1s, a lot of the time, are the ones that do get those symmetrical second legs. So it's a little bit difficult to be shorting, but I did take the short. I thought we might touch the actual 13 high. 27 is a bit disappointing. I probably want a better bar there than I got. Ideally 27 would close at its lower third, not its upper third. When you're taking a limit order trade like that, you probably want to see the market close in the lower third if you're shorting, and in the upper third if you're buying. A lot of limit order trades, you want to be out 2-3 bars. And instead, a decent close for the bulls, but on the moving average, no reason to exit yet. 28, a low 1 short. I still thought, my symmetrical second leg measurement was somewhere down here. So I still thought we might reach the 13 high. Instead, I got a disappointing bar 29. A big enough surprise to me that it's probably time to start trying to look to get out. I tried to get out at break even on 30. It missed it by, my break-even price was higher because I sold the 25 low and the 24 low rather than selling the close 26. So my break-even was somewhere up here. And so I did not get filled 30, and I ended up getting stopped out for a loss. So my losses are usually a bit bigger than my wins. So I did take a loss on the day, but I did pretty well Friday. I did really well Thursday. So still doing decently in the month. so far, but things can always obviously change. Uh, so for micro channel 1, 2, 3, 4, 5, 6, 7 bar micro channel, it's going to get a second leg. So no use in selling 32 because you have a 7 bar micro channel. Yes, it's a parabolic wedge, but parabolic wedges lead to minor reversals. And with 7 bar micro channel, it's really better not to sell the first reversal. Odds are we're going to go higher. If you do sell the first reversal 32, you can't put a stop above 32. You have to have a wide stop and be willing to scale in order to make money. And this is a prime example as to why. If you sold, 37 would have let you out had you scaled in above the high. So I think if you are going to take these sorts of swing trades, it would be really, really beneficial to increase your probability by using a measured move stop and scale in. You're going to lose sometimes for sure, and the losses will be pretty big. But you'll find that your win percentage is going to get higher if you look to scale in above the bar and get out break even. Or with profit, you can go test, right? Go figure out what's ideal for you if you're going to take these kinds of swing trades. 38, 39, 40, 3 straight bull bars, but obviously a very late leg. We had spike, which you could argue this is the whole parabolic wedge. It's spike, and then a pullback, and then a channel. So 1, pullback, 2. You could argue 1, pullback, 2, pullback, 3. I think that's okay. It's a really late leg if you're buying 40, but it's still got a symmetrical second leg on 43 through 45. 45, 46, and 47. Do you sell this? I had to go. So I only traded up to like bar 44 today, and then I had to go. So I missed the entire back half of the day. But it's pretty interesting. Actually, I don't know if this signal was a win on 57. I'm curious. Okay, so that would have been a loss on 57. Do you sell 47? It's not really that great, I don't think, because if you think about it, well, first off, big, small, big, so expect a pullback. And think about the fact that what's your best case scenario for the bears here? Trading range, right? If you're a bear, the best thing you're going to get out of this move is a trading range. So in the worst case scenario is it's a bull trend. The best case scenario it's a trading range. If you're a bull, the best case scenario is a bull trend, and the worst case scenario is a trading range. So I think if you're a bull in this area, or if you're a trader in this area, look to make a mistake long, not short. Problem is this is leg 2, 1, pullback, 2. So if we have 2 legs down in a trading range, and your best case scenario is a trading range, you're trading leg 2 for leg 3, which is lower probability. So I think if you're going to trade short here, you probably want to try to trade leg 1. 48, 49, and 50. I think 49 is a bull surprise, so odds are that it gets a second leg up. 50, 3 straight bull bars, buyers below. You can see, I don't know, some traders might be using 51 to exit. A lot of bulls, they buy the close, they buy more lower, expecting that this is going to be a trading range. And, worst case, they should be able to scale in and make money. We get 3 more legs up, 1, pullback, 2, pullback, 3 to this signal. Decent bars, but the location is difficult, obviously, with so many legs up. So you don't want to get caught buying really late. So you kind of start the Russian roulette game when you're buying really late legs. Yes, they might work, and not they might work. They do work a lot of the time, but you kind of just have to figure out what situations you're willing to lose in a late leg. So micro gaps can often be climactic in late legs. That's something to go study. Also, I'll mention this again, but I am going to start putting 1 review a week, or maybe once every other week, but at least once every other week, I'm going to put a review in the members area rather than just out to the public. I mean, I'm making 3 to 4 free videos a week, so figure I'll throw 1 in the members only area for the people who pay. So that's really it. But 64, 65, and 66, really strong. 65 and 66 breaks through the moving average strongly. We do have magnets below, right? The bar 26 low. Traders who sold 24, 25, 26 are getting trapped, and they probably shouldn't be because this is a pretty good signal. So it's going to be a target later in the day. You could take the short, hope for 1R. You don't quite get it on 67. You could sell more above 67. I'm sure a lot of traders did. This is a pretty strong move, closing near the low 65, closing near its low 66. And then the 67 goes a long way. So we broke pretty much right through the moving average. Traders sell above, looking for a second leg down, and you obviously get it. I haven't, I don't have the immediate stat, but one of the things I'm studying is when you get immediate follow through, how often do you get a symmetrical second leg with the whole move based off of immediate follow through? And how often do you get immediate follow through? So how often does the move plus the immediate follow through get a symmetrical second leg? And how often in general do you get immediate follow through? So I thought it was logical to look to short and add on the close of 67 or above 67. And then you get a second and a third leg down. 72, 73, 74, obviously not great. And then we sold off towards the close. It tested this magnet back to the 13 low. 13 low is lower than I would have thought, but I think that the 26 low was the initial magnet. I'm not super surprised we got to the 13 low because it's a strong enough bar that those traders probably needed to get let out at some point. But I'm not surprised we got back to the 26 low. The daily chart, what's starting, right? What have I been saying? To me, I think we're probably starting some sort of trading range. Maybe this is a breakout, pullback, leg 2, pullback. Maybe we get a leg 3 up, but the bears are starting to get strong moves. And so I think we're sort of heading towards some sort of top here, but I'm not selling this bar. It's a breakout attempt above the bull channel, so it's really not all that great, but I would not really be all that interested in selling the close of this bar because odds are you're going to get one more like sideways top. The weekly chart, again, it's a really strong pair of bull bars. So I do think, we pull back this week and then maybe we get a third leg up, 1, pull back 2, pull back 3. And I think 3 might go up into this area before we start to go sideways. And that's really it. The monthly chart, I do think we probably go above last month's high. I don't know if we do it this month, but we're going to close the gap with this low. So 58.48. I would not be surprised at all if we bounced up and closed the micro gap this month. I would not sell the close of April with a ton of enthusiasm. It went a long way, so it might get some sort of second piece. I don't know if we get back down to this point. Most strong rallies, start with good signal bars. This. So in my opinion, if we trigger above this and it's not a very good looking bull bar, we might have to come back down. But I'm really not all that sure of anything. We might have to get back down to 5,000. I think it's possible. But if we get back up into this area, basically if we touch 58.48, that low, I'm probably going to exit my current positions in the S&P. That's really it. So that's going to be the review.